All right, Kevin, this is Kerry. This video is for the markets Wednesday, March 13th. Right here, you can see the weekly wheat continuation chart. Nice rally today, settled in the low 450s. Um, and actually, let me go ahead so you can see this formation. Just a reminder, still 430 and a quarter. I'm going to go to the daily chart here. This is actually on today's wheat uh, newsletter. You've got a short-term formation here at 447 and a quarter. We also settled above the high on Monday, which is 441 and three quarter. But 447 and a quarter could contain session weakness, assuming we open above it. I've got 465 even. I'll actually tell you what that is right now. This is 465 even. It could, under most circumstances, be considered a session containment level, but given yesterday's volatility, I'm calling it intraday, and that if we push through it, which is certainly possible, this 475 half trend line is in reach. That 475 half trend line can contain buying through the balance of the week. It's also the point to settle above, in my opinion, for yielding this 512 even formation. So yesterday's test, the test Monday of the 430 and a quarter long-term channel bottom that I know you're real familiar with, that actually, now that we've tested it, and above which I'm calling 512 even a 2 to 3 month target. Current volatility, we could reach that within 2 to 3 weeks, perhaps. And so I know we've got the two calls, so I thought I'd bring that up. I had this idea that if we tested 475 half, say between now and Friday's close, we could unload one of those calls and then hold the balance up to 512, presumably, because off of 475 half, the market could slip back into the lower 430s once again within a week or two at the most. So there's that. I just thought I'd throw that out there as an idea. I'm not committed to that idea, but I thought I'd at least let you know my thoughts on the matter. So there's wheat, and I'm going to scroll through. I'm actually going to go through here visually. Let's talk the cattle market. We got a sell signal today. Actually, I've got the newsletters up for those. Let's go April. And you can see, I'm going to bump this up just a little bit. This is April newsletter, actually. We settled in a sell signal below the 127.07 formation. We've got 128.27. Well above that is a range of resistance below which 122.57 expected over the next 2 to 3 weeks. So, we could play this, though, if you've obviously are well aware of the fact that the June contract did not settle below its formation. I think it's worth waiting on this one. We actually have a decent bounce here off of this formation in the June contract. So, and you can also take a look if you can imagine this double top here and the intermediate low. We broke that today. Not only did we break it, but I don't have the exact number here, but it looks quite like we completed a move, if you will, by violating that intermediate low. We broke as far south as that entire range had played out for the week and a half prior to that. So I think 118.07 is worth settling below before we assume bearish follow through in the June contract. Obviously these two are not going to diverge considerably. So if April continues to sell off over the next 2 to 3 weeks, June's going to elicit that sell signal. But there's also the possibility that April's sell signal is bound to fail. Especially obviously if the June contract holds steady and continues grinding up into the 121 or even 123 handle over the next week, 2 or 3. So there's that. I say, as far as the cattle market goes, let's wait a settlement on the June contract below 118.07, and then I think we've got a good 3-4 handle continuation to the downside into the 114 handle, where we find actually long-term support. If you've listened to today's audio, you can see I've kind of pegging this. This would be consistent with June price levels as June rolls into lead contract here in the weekly continuation chart. So this is a significant support area, and we'll talk a lot about that if we approach it in the coming weeks. Let's go back to so I'm kind of scrolling through here. I'm feeder cattle, not much, live cattle spread. I know you're familiar. Ethanol, you know, ethanol is a thin market. And here we go again with the tricks that CQG plays on me. but I've been calling this a 3 and 4 star support area, 1.293, and above which, if you go take a look at the weekly chart, pay attention to that 1.293. I also have, here we go. This is, okay, here it is. 1.293, same formation actually. I don't know why I said it was different. It's actually the same exact formation, but on the weekly chart. So this is our support area, can absorb selling into possibly through April, and above which this market can, play the consolidation game near term, but mid to longer term, I still think this 1.5 is in reach over the coming months. 1.415 remains kind of a 3 to 5 week upside target. I don't have that labeled. There's ethanol. RBOB, same thing. We're basically testing this channel resistance, which is consistent with a long-term ascending channel bottom on the weekly chart at 84.57. So this is our ceiling. We got up to 83.69 this week, so just shy of it. So just, I'm not screaming that we should do anything here for sure. I'm just kind of throwing it out there that this is sort of a 2, close to a 1. If we want to act. Once again, I realize as I'm speaking, I haven't labeled the 1s and the 2s. I'll probably do that verbally here at the end of this video, and then probably post them, perhaps. Anyway, here's crude once again. Now, this is a formation we tested yesterday, and tomorrow, that is Wednesday, it's at 57.38. And so we've got this support structure here in the 54.47 to 55 area you're well aware of, can absorb selling through next week, and above which long-term resistance currently in the 61 handle remains a 2 to 3 week upside target. If we close today above 57.38, then I think that's I know this is kind of a classic. It'd be a short-term buy signal. It would only be good for maybe a week or two at the very most, but I think we could get a $3 to $4 run off of that if we're long into the 61 handle, where this market would beg to be shorted. And you can see that on page 2 in the crude oil chart. Not much going on in corn that I would advise, nor soy meal. There's a lot of activity. Volatility is definitely pumped up a bit. Beans, same thing. We've got these in the bean market. I'll take a look here once again. This is really, I've got to do something about this. I wind up reconstructing all this stuff. It doesn't take long, which is why I'm not hammering on CQG. By the way, we could talk to CQG about getting you your own monitor. I'm fine with that. And if you'd like me to do that, I will talk to my sales rep to see what the cost is. But right now I've got a 1/3 speed line, 909 above the market. We could test this and hit back into the low 880s, possibly that 856 and 3/4 long-term support level I keep mentioning, which is kind of a big picture target below 941. So big picture beans 941 even, long-term resistance 857 long-term support. And inside we could capture these 3 to 5 day 1 to 2 week moves. I don't know if it's worth it. It's kind of this big consolidation pattern for beans. I like the bean market. I think it shapes up technically really nicely. But I'm going to erase this Fibonacci. It'll take care of that. This is our support right here, 856, and then our resistance is a very similar structure at 941. I guess we did settle above it by a hair at one point. We broke right back. So anyway, that's beans. I'm going to just say there's nothing really to do there for us right now. Nothing is screaming. We've covered wheat. S&P, S&P is looking good. I do think if you go to page 2 on the newsletter itself, I think the level we want to wait for is this one, this 838 and 2838 half. This channel structure. If we take it out and settle above it, I do think it's worth finding a way to be long the S&P, at least for a retest of this 2947 high. But actually, I've got an upper resistance area around 3100 that would be kind of a 2 to 3 month target. So we'll keep an eye on that. That's a 2. It will probably be a 1 by the end of next week as we approach that 2838 half level. So let's jump into our extra markets. Not much different. This is a weekly chart of the euro currency. We're still trading between the 62% downside retracement at 112.12 and this former channel top at 115.05. Nothing to do inside. I'm more inclined to sell this rally than I am to bottom pick this at all. And in fact, I think we could consider going short if we settled the week below 112.12. Otherwise, it's a 2, maybe a 3. Let's take a look at the Canadian dollar. A little bit of a rally here today in the dollar. Now I put up a descending 1/3 speed line here. Technically, if we settle above the 1/3 speed line, I do have a bit of a buy signal. You know, this is kind of one of these gray areas, a 6 of this, half a dozen of the other. I have a former channel bottom I've been talking about, but we have a gap here, 74.87. We settled below that at 74.83 today. We didn't close it. The high was 74.86. So we basically closed this gap. I think if we settle above this speed line tomorrow at 74.80 even, this market has a decent chance of continuing up into this 75.81 area where we could actually should top out on a weekly basis, if not into later April. But once again, you know, the Canadian dollar is kind of setting up kind of similar to soybeans. You know, you've got these 3 to 5 day, 1 to 2 week opportunities, and then that's about it. There's nothing setting up as long term. Not until we get up into the 77 handle do we either short it long term or buy it long term if we're proven wrong by closing above it. Until then, you know, this is where the question begs, what is our preferred time horizon? I say it's at least 2 to 3 weeks out and beyond. We could migrate into the 3 to 5 day to 2 to 3 week range at some point if we wanted to. But I say, you know, we stick with the longer term outlook right now. That's just my vote if you were taking it. Canadian dollar onto the Japanese yen, nothing to do here once again, kind of just in the middle of no man's land. You've got resistance and support, and really nothing to do, in my opinion, here. I'll be watching this closely. If we settle above this high, which is the move low from last week, you know, we should get a pop up here, but there's really not much to do in the yen right now. It's kind of a consolidative structure. British pound, Theresa May lost her second Brexit vote today. There's not much of a reaction, actually. You know, the CNN covered the story and said it was a humiliating defeat once again. But once again, we've got 1.2831 on this weekly chart. That is our floor of support, above which the market actually remains stable to even bullish as we continue into April. And yet, if we close below it, I think it's a good short sale opportunity. You know, at least down here within 1, 2, 3 weeks, but I think more than likely back down here within a month or two. That would be my guess. So there's a British pound. Gold. Gold is continuing to do this sort of, we essentially tested this channel structure, which tomorrow is at 84.2, 1284.2. And we have this 1/3 speed line that's been holding the highs beautifully this week. Tomorrow it's at 1303.2. If we close above 1303.2 tomorrow, then this kind of half-ass head and shoulders development will be negated, and I think then you can expect complete follow-through into the 1330s or 1340s within 1 or 2 weeks. So that's this structure. We're holding it, and overall, I'm bullish above it into April and bearish below it down to 1235.3 over that same 3 to 5 week time horizon. So we're still close to this pivot point. If we get down there in the next few days, I think it is a buy opportunity. Inversely, if we close below it, sell opportunity. And silver, same structure, modest continuation upward. Still have 14.901 as this weekly channel bottom, consistent with these highs. This low 14.985 last week. So this is our floor of support. It's kind of similar to that gold chart. And that gold chart, by the way, was a daily chart. This is a weekly chart. And so silver is structurally positive, stable rather above 14.901. You got a bit of a pivot point here at 15.624 that if settled above should yield at least a retest of these highs, if not a test over the following month or so of this more significant 16.78 area. I would have to say that holding above 14.901 certainly allows, and I've said this before, this 1678 channel resistance over the next several months. And inversely, if we close the week below 14.901 in silver, we should continue south, at least for a retest of this low, if not lower. And so copper, we talked about this today. The market, this is a weekly chart once again. The high settlement price following this rally is 2.9515. We got up to 95.70 day, settled at 93.15 on this weekly bar. If we close the week above 2.9515, this would confirm this buy signal, which is pretty classic. And with that, just, at what point will we test this? I think this is the ultimate target, actually, above this formation at 2.8598. You might set off a trade alert, if we get down to this high at 2.8665, we could then get on the hammer and say, hey, should we buy them here? Otherwise, this is just sort of we're observing it, I guess. And platinum, nothing going here, just in the middle of nowhere. And the bond market, market's creeping up. There is a short-term play that if we settle the week above 147.20, we've got a two-handle rally. It's $1,000 a point. That should take no more than a week, two at the most, to 149.14, which is our significant resistance area if you're looking through the balance of the year, as I've been mentioning. This is an area we can top out at and then head south into later year, or if we settle above it, a bullish continuation over the same time horizon. And finally, the NASDAQ continued higher. We're now above this bar. We're above this high settlement price. This is a channel structure. The low this week is 70.2475, and we've got 70.3775 as that channel structure. This is an area similar to the S&P in that it's a channel structure that goes back. It's more horizontal than the S&Ps, but this week it's at 75.57. Next week it's at 75.49.5. This is an area that can absorb buying well into the second quarter. Once we test it, the market can fall back possibly into this zone here, which is around 6,400. And if we close above it, it's bullish continuation. So this is a pretty rock solid pivot point, in my opinion. Now, could we top out here at this old high and then fail? Perhaps. But I think the structure is going to win the day in terms of trend defining levels. So we'll keep an eye on that as well. I think that about sums it up. If I've got if I can, with this particular editing software, I'll throw in sort of the go-to places. Otherwise, I'll just include it in the email, the link to this video, with sort of the ones and the twos. I think we're kind of roughing that definition out. One is we can act right now if we want to. It would be valid to act this very moment. Whereas a two is we're getting close to acting. Let's keep a close eye on this market. And I'll break that down. 18 minutes. I guess that could be a norm here, holding under 20 minutes on these videos. That is really all I'm going to say for this is Wednesday's market analysis.